right below the 4 low. So I still think we'll hold the low of the day. Yeah, but as I said, every sign of strength that the bears generate reduce the chances that the low of the day will hold. Right now, I think 60% chance. Up here, 80% chance, and then here, 70% chance. Now, I still think 60% chance we've seen the low of the day. Big bar, climax, and high 2 buy, but 5 consecutive bear bars. So that reduces the chances that the reversal up will get very far. 25 fell below 24. 24 is a multiple of 12, so it's the final bar of the 60-minute chart. And 25 is a bear breakout below that inside bar. And so far, not a good entry bar for the bears. Is it still always in long? I guess I think so. I think it's the trading range day. And I don't, any short down here. I took one short. Any short down here is a scalp. And to buy here, I think you need a wide stop, probably below the low of the day. Bulls probably will have to go sideways and create some buying pressure before we can go up much. I'm not going to sell down here. We're close to my target, the 4 low. Best case for the bulls, if we go sideways and create 2 or 3 bull bars and then get a downside breakout that reverses up, then we might be able to work back up to the 21 high over the next couple of hours. Even though the bars are big, it's still trading range behavior, selling above 17, selling above 15, buying below 19, buying below 16, and scaling in lower. And then they take profits when it comes back to the breakout point. High 2 buy, about 5 bars down, 5 consecutive bear bars. Low probability, and the best the bulls probably will get is sideways here. But the bears have a stop up here. So if you're selling here, you need a wide stop. For the bears, 26 is a pullback from the breakout below 16. We have a target below. So we might go lower, but I think selling below 26 is similar to buying above 8. You're buying right below resistance. Here you're selling right above support. Bears want a gap, 26 high, 19 low for a measured move down. I think it'll probably be an exhaustion gap, and that will probably find buyers at the 4 low. Less likely we'll just collapse. So why did we not go above the 6 high? Because it was too obvious that there were sellers there. There were many orders to sell the 26 high after 5 consecutive bear bars and with a magnet just a little bit below. II, potential final flag. I'd like to see the market get down to the 4 low, maybe a little bit below, and then reverse up for a possible swing up. Bears obviously want the breakout and the new low of the day. So what happens at the 4 low? Do we race down to the new low of the day, or do we find buyers? I think it's more likely we're going to find buyers here. Bulls need a reversal up. What about arguing that it's a 8-bar bear micro channel and the first reversal up will be sold? That might be true, right? But I think we're probably in a trading range day, and that II 2627 might become the final flag. So that might be enough to overcome the 8-bar bear microchannel. You can see there is some buying going on around the 4 low. It looks like we went below it by about a tick or so. Market's deciding whether to go down to the low of the day or reverse up. 2 legs down, 16, 28. It is possible that despite a 30-point rally, we could go to a new low of the day. It happens that sometimes you get a huge rally and then a new low of the day, but usually does not. What's the target for the bulls? It's the target that I've mentioned several times today, open of the day. I think the bulls need a bull signal bar, right? You know, fairly tight channel. And for the bears, they're swinging a short for any reason, expecting a new low of the day, and for the bulls to panic out and for a huge sell-off. It can happen, but it's not likely. It's not likely after a rally that is as strong as this. And open of the day in the middle of the day's range. So it's a magnet. Let's say it's a small doji signal bar. What do the bulls do? It's still a buy, but whenever you have a very small signal bar, the stop placement is tricky because it's pretty common for the market to trigger the buy and then immediately reverse down and go below the low of the bar and then reverse up again. So typically on a normal day, the stop would be 3 or 4 ticks below the low of the bar, below the low of 29. Here you might have to use even more, maybe even below the low of 1. Stop for the bulls right now. A lot of the bulls have stops below the low of the day, at least initial stops there. Let's say it is a good-looking bull bar. Can you buy it despite the 8 or 9 bar bear microchannel? I still think the odds are it's a trading range day. So the bulls see it as a large 2-legged correction and a wedge bull flag and a test of support. I said trading range days, typically the market falls below support and goes above resistance. And this is an example of it. Signal bars are often bad, so we may get a bad looking 29 buy signal bar. How big a tail will they put on the top of the bar? The bigger the tail, the less reliable the buy. I think it's a reasonable swing buy for a test of the open of the day. For the bears, double top 26. Low probability, shorting this low down in what probably will be a trading range day, but they certainly can do it for a swing. Right? We've been trending down since bar 9 with an acceleration down here, similar to what we had over here. You know, 6 bars down, the bulls tried to reverse, they got a couple legs up, but then the bears got another leg down. Now, why would you have some profit takers right here? Because you had some bulls who bought before low. 9 bar bear microchannel, so not a strong entry for the bulls. Bears are hoping double top 26. Right now, probably buyers below 30, but it's an okay swing short. We're always in short. Open of the day is the initial target and then the moving average. I show this chart fairly often because it's a common situation. sell-off, today's strong sell-off, all right? Possible final flag